Whether you talk about robots, so the ability to advise customers without having to have a relationship manager behind. So really leveraging artificial intelligence or ability to address the customer needs and risk profile automatically. That's one clear trend that we see. We also see things around how to help relationship managers prospect, so identify clients using social profiling. We also see a number of trends regarding the regulation piece, so help banks identify which regulation they need to cope with when it comes to servicing a specific customer, whether that customer is onshore, offshore, for what country, for what kind of product, etc. So I think both from a efficiency perspective or from a revenue making perspective, banks are really trying to understand how technology now can help them improve. We will never be able to 100% rely on technology to understand customer expectations, right? At the end of the day, emotions, one-to-one relationships still make sense. So I think technology is there to improve, augment, empower banks to do some of the ground research or the background research on customers to be more relevant when they finally meet at one point in time. I wouldn't bet that artificial intelligence or robotics will replace completely the relationship manager. That said, there's a number of things that we see now that are helping banks to better understand what their customer expect from a style of relationship, tone of voice, or from a product perspective, and at which point in time in the life cycle they expect what kind of service. And this is creating a relevant ground for discussion. If you look at 15 years back, bankers will have to, one by one, meet customers many times, ask questions, understand what they do as a job, whether they have a family, whether they travel, what's their appetite in terms of investments, etc., etc. This part can be shortcut by using technology. So understanding social profiling, reading what are the posts, what Google hits come up with when you search for the name of your customer, whether that customer was on the newspapers and for what reason, is the guy engaged with different companies, etc. So all that groundwork can be done much faster and much better using artificial intelligence and research. Then when it comes to addressing the customer, there's still a bit that will have to be done face-to-face, I believe. I think there are different streams where fintechs have a role to play. Things on the regulation, on the compliance side. So the ability to do all the what we call KYC is the know your customer, understand what's the background, whether the guy is a genuine customer, whether the bank is allowed to do business with that individual. So that's one big stream where fintechs are using blockchain and distributed research, etc. So that's a clear area where we can see improvement coming. There's a big chunk around, as you mentioned, robot advisor, which is more on the advice process, so how you actually provide your customer with investment advice. Initially, it was down to the RM to actually do the research and advise the client. Then all the research has been centralized in departments. Now RMs are distributing what these research departments are coming up with. And now we say actually maybe for that distribution we can even leverage robots for doing so. So mapping somehow what the expectations are from the customer and the risk profile with a list of investment products and trying to do the matchmaking automatically. So on the advice piece also there's a big area for improvement. And then it's the way to actually address the customer, so the last mile, whether you meet face-to-face, whether you do it using chatbots, whether you do it using video conference, etc. So I think the whole value chain of providing wealth management advice is somehow changed, transformed by leveraging technology. The content, the essence of it is still the same, but wherever there was friction, I think technology is trying to reduce it. For me, it's really a question of how all these components will slowly come together, and this will actually help us see how financial services will look like in the future. There are obviously some big components there. So we hear a lot about blockchain, we hear a lot about robots, we hear a lot about new incumbents, so non-financial institutions starting to provide financial services. And I think this is it's going to be of a bigger impact than the addition of all the smaller technical components together. So the ability of Alibaba to do banking and Google to do banking, the way they look at banking is very different. They don't have that background of heavy process, legacy systems, different mindset. They really look at it more as how startups would be actually looking at financial services. But they have the financial power, they have the customer base to really make a difference on the market. So, I mean, whether you look at it from how the current players will leverage new technologies to do their job in a different way, and we can argue about their ability to do so, or you can look at it also from another perspective, which is in 10 or to 20 years from now, probably the biggest financial players won't be banks anymore.